But the reason that resonates with clients is when you sit down with a client and you're talking with them and you explain that, hey, I can cover your mortgage up to $450,000 with an instant decision.
Up to $450 with an instant decision.
Yes.
Like same day.
Absolutely. Right there on the spot.
On the spot. When you say on the spot, is that like within the hour? What is it?
It means immediately. So as soon as you hit that final button, it's going to tell you yes or no.
As soon as you hit the button. So there's no waiting.
Correct. It's going to tell you yes or no.
Well, welcome everybody to another episode of the Life Insurance Academy podcast. We're excited that you're with us today. Today, we have a special segment, a special carrier segment. We're going to be featuring one of the up-and-coming leading carriers in the simplified issue space today on today's podcast, Americo Life Insurance Company. And we have with us none other than the greatest rep they have, apparently, was what he told me, Mr. Andrew Kostus. Andrew, welcome to the Life Insurance Academy podcast. We're excited to have you join us on the show today.
Hey, thank you so much for the opportunity. It's really, really excited about the opportunity to get a chance to talk with you here today.
Andrew, what is, now that I've kind of ruined your intro and stole your thunder on all your awesomeness, what is your role at Americo? Let's talk a little bit about you, your background, your role there, and what you do.
No, great question. My title is Senior Account Executive at Americo. I always love to tell this story. I actually started at Americo about 20 years ago, and right out of college, came back home from college playing sports, and my parents were like, "Hey, man, you got to go get a job. Like, we're done paying now." So I started at Americo thinking I would do insurance for 6 months and figure something else out as I went along. And the reality is it's an awesome company, and had the opportunity of working in multiple departments over the last 20 years, but it's been a wild ride, but a lot of fun. So
you've been groomed from like a young age, right out of school. Like you've drank all the Kool-Aid, eaten all the buffets, like you're all in on Americo.
Yeah, absolutely. I started as a trainee in what they call policy accounting. So I was applying premiums that were coming in the door, and then worked through the claims department, and then ultimately over to the marketing department several years ago. So I have a little unique experience of getting to the sales role, maybe more so than most. But it's been a fun ride, and it's a great company to work for. So
cool. Well, let's talk about what listeners are going to get out of this episode today. I always like to lead with that. Obviously, people who listen to the podcast, our numbers are going through the roof right now, by the way, and we really appreciate you guys. If you are on right now and you are a recent subscriber to the podcast, we so much appreciate you listening. We appreciate if you like and share and push this content out to other people. The value and the feedback that we get from so many of you inspires us to continue to produce content, and it also kind of guides what we do as far as content goes. And so we've actually heard from some agents that they'd like to hear some more insight from the carrier side and what that looks like. Not that we're in here for a sales pitch or anything like that, but we want to know, hey, if there's a product out there that can help me move the needle on my business, we'd like to know about it, and we certainly like to know why. So thank you for listening. Today on the podcast, what we want to do is give you a peek behind the hood, under the hood, and so that you can take a look at the simplified issue product that they've really developed strongly in the market. It's growing tremendously. Really two primary areas, simplified issue final expense and simplified issue term for mortgage protection, with some other bells and whistles on that stuff. So we're going to dive into that, and you're going to get to learn how to maybe use their product to help you grow your business. So Andrew, let's talk about, man, the kind of these two areas that you guys have really developed a niche in, and you've been blowing up some sales. Well, before we do that, can we let you toot your own horn here? I mean, what has Americo's been doing? What's the growth trajectory that you guys have been on, and why is that happening?
So it's been a crazy trajectory in the last couple of years. And before we get into the numbers of it all, you asked why it's happening, because of a lot of great distribution partners. The reality is that we're only as good as our distribution partners. We have a lot of different distribution partners that do a great job of using our products and our process. So we've been really fortunate in that regard. But really, one of the reasons I think the growth that we've had is we've tried to focus since, let's say, 2015, 2016, on really how can we get a decision very quickly, whether you're in the home and then more recently in the last year or two, if you're selling over Zoom or selling over conference calls. We've really put a focus on the technology piece and getting that instant decision. And what we found is that when you think about life insurance in general, there's a lot of hard work that goes into setting the appointments, purchasing the leads, doing all of that. And we just want to do the last step or two very easy. And that's submitting a policy and giving you good products. And but to answer your question, we've grown year over year over year. And I know a lot of companies say that because a lot of companies have done that. The reality is with us is our growth has been exponential. It's been a wild ride. And we're not stopping now. So
do we have some numbers? Do we have some numbers on issue paid, or is that something we can share?
Yeah, absolutely. So I can tell you just in the year 2021, for example, we did north of 200 million in simplified issue. So just to kind of put a number on that, a ballpark number in general on that, the reality is 5-6 years ago, that started a lot less. And again, that's a credit to all of our distribution partners that have said, you know what, we like what we hear. Our agents like the feedback they're getting. Let's roll with this and see what we can do. And we're anticipating another huge year this year so far. We started out really strong, so have no reason to believe it's not going to continue.
Tell me, let's dial in. There's really two areas or market segments that you guys have decided to try to own or at least get really good at. Can you kind of break those out? Maybe we can start with the final expense or the senior market first.
Absolutely. We have one final expense product that we use, and it's called our Eagle Premier Series. So we've been using this product since 2015, 2016 timeframe. And what we have found is that there's a couple key features to it that agents tend to really like, clients really like. Features such as there's an accidental death benefit built into the product. So when you think about you're writing in the senior space, so you write a $10,000 policy, and that means if the client passed away of an accident, the death benefit's worth $20,000. We have a really unique niche called our Quit Smoking Advantage that allows smokers to get non-smoker rates for 3 policy years. So again, we can dive into that a little more as we go along, but that's a great feature, especially in the senior space. And then just the ease of use of the e-application, what we found was that not only do you get the 100% instant decision, but it also ties into Social Security billing. So for your agents and the consumers, it's a win-win because it means we're drafting when the client has money because it's when the money was just put in their Social Security or in their bank account from Social Security.
Mm-hmm. You said 2 things there that should have caught most agents that are working in the senior market should have caught their attention. You said instant decision, and then you said Social Security billing. And I know you just kind of breezed over that, like everybody knows it. But if you're watching this video for the first time, or you're dialing into our content, and you've been listening to our podcast, or you're watching us on YouTube, and you're in the senior market and you don't know how important it is for instant decision and or Social Security billing, those 2 are not like setting off like alerts for you. You need to listen because this is going to impact your decision. It's going to impact your profitability. It's going to impact your efficiency, and it's going to impact your cash flow for multiple reasons. Andrew, let's dive into those 2 areas. Why are those 2 things so big to field agents that are sitting with, Mr. and Mrs. Smith, either face to face or on the phone or over a Zoom? Why are those 2 things so huge?
Yeah, absolutely. The first one being the 100% instant decision. There's a couple of reasons that's really important. Number one, that means that every single time you write the e-application for Eagle Premier, you're going to get a yes or no answer. So it's not a 70% time. It's not a 90% time. So a couple of reasons that's important is number one, that means that when you use our e-application, it doesn't matter if it's 6 a.m. or 9 p.m. or on the weekends. Our offices don't have to be open for you to get that instant decision. And the second piece with that is that means there's no amendments, there's no paperwork. You're just filling out an e-application and getting a yes or no answer. So I don't know how many times we heard in the past prior to putting this e-application in place, hey, I completed an application, and I'm sure a lot of your listeners have had this happen where they complete an application with another carrier and then find out 2 or 3 days later there's another piece of paper they need to have signed, or they forgot to initial a corner, or
Correct.
do something like that. And it's frustrating because now you're going back to the client again. And not only do you want to get the policy issued, you also want to get paid. And so what the 100% instant decision does is it eliminates a lot of that confusion, and it allows the opportunity for you to go in and write the application itself. And the part about the Social Security billing that's really important is it gives the client, as importantly, the peace of mind to know that they don't have to worry about when the policy is going to draft. If a client's getting their money, let's say on the second Wednesday of the month, well, they know that agents know you can set up the policy to draft on that day. And it gives the client the peace of mind to know I don't have to keep this extra money over here because it's going to draft on some random day. It's going to draft the same day I get my money for Social Security. So, and it helps immensely with persistency. As you can imagine, the best time to draft is when the client has money. So we found that if you tie it directly to Social Security, again, this is all tied into the e-application. You just select Social Security billing and select whether it's second, third, or fourth Wednesday or first or third of the month. And the e-application takes care of the rest for you. So pretty simple process.
Now, can you set up for the premium to draft immediately, like on submission, but then a recurring date different, like on the second Wednesday of the month? How does that work?
Great question. So if you wanted to draft immediately the day you're writing the policy, you can go ahead and set that up. And then if you want it, change it going forward, what we ask is just call our 800 number, and then they can change that going forward for you. So the e-application is going to take care of the initial payment. And a lot of times the initial payment is the same every month. So it's, again, in the Social Security world, it's going to be second, third, or fourth Wednesday. But if you say, hey, I want to draft it today, and then I want the second Wednesday going forward, just contact our office and we can certainly get that set up for you. So
for those people who want to lock that sale in, and we know how important it is to get that first payment on the books, they want to lock that sale in, they can, and then they can call in to adjust to put it on the date, another date.
Absolutely.
Okay.
Absolutely.
You can also future date it for the Social Security billing date, correct?
Correct. Yes, absolutely.
Okay. So you don't have to immediate draft. So if the client doesn't have any money right now or is low on funds, and they're like, hold on, you're going to have to come back. You're going to have to come back after the 3rd when I get my deposit. And you can say, no worries, we'll go ahead and set it up, and your first premium will process on the 3rd with your Social Security deposit.
Absolutely. And that happens all the time.
Cool.
Where that makes perfect sense what you're asking, where you're writing the policy today and it's going to draft on, again, second, third, or fourth Wednesday if they use Social Security billing. So that happens all the time. So that's not a problem at all.
Now, you guys just released a new piece of technology, some new system for signature that I don't think anyone else in the industry has done it yet, and you're still trying to make things simpler for the agent. What was that you released? What's been the response? How's that working with this Eagle Premier product, and why is it so good for agents working with seniors? Why is this a game changer?
Absolutely. So we released a brand new e-application in February 2022, and one of the things that encompass in that is a texting feature. So if you think about the last couple of years, there's been a shift overall in the simplified issue industry of a lot more sales that are remote sales via Zoom, conference calls, things like that maybe there were prior. So one of the things we wanted to do was make our e-application as easy as we could. So now with our e-application for Eagle Premier, there's a spot you can put in the client's cell phone number. And then what happens is a client actually gets a text from Americo. As a matter of fact, they would get 2 texts from Americo. The first one would have a link that has a disclaimer if they would like to read it. But the important one is the second text that comes immediately, and there's a 6-digit code. So Roger, if you and I were selling over Zoom here, and I asked you for your phone number, I put it into the system, you would instantaneously get 2 texts from us. What I would say is, hey, Roger, do you see that 6-digit code? You're like, yes, I do. That's great. Can you hand it back to me? You give me the code. I put it in the system. That's as good as your signature. So no longer do you have to log into DocuSign or Equisoft or anything else in order to try to figure out how to do that. It's just right there on your phone, 6-digit code, your signature. The reason it's so important is 2 reasons. Number one, what we found is the ease of doing business.
Mhm.
It's very easy for a consumer to look at their phone and say, hey, here's the text I've got. The second piece with it is the reality is it cut down on the time. As I mentioned before, if you think about all the work that goes into selling a product, the last thing you want is the process to be clunky at the end. And all of a sudden the consumer is a little like, okay, is this really, how's this working
Yeah.
out? The reality
Yeah.
is it
Sometimes you
streamlines
wear
that
them out.
process.
Yeah.
Absolutely.
Sometimes you wear them out at the end trying to get it over the line, and people start coming home, dinner time. It's starting, they're starting to get other things on their mind, because in their mind, they've agreed to this. Now they want to move on and finish it. And yeah. So
Absolutely.
this has been in my opinion, this has been one of the biggest moves. We just did a podcast not too long ago where we talked about big changes in the industry has caused so much opportunity, created so much opportunity. And I literally referred to insurance companies as old moving institutions who didn't want to change things unless something was broken, kind of like old banks and things like that. I said, that's why you don't see too many insurance company names change, banks' names stay the same, and funeral home companies' names stay the same. They're very profitable, don't need to change anything unless it's broke. But COVID and the pandemic created a whole new selling environment, I think, that a lot of these companies, Americo, one of them, woke up a little bit and say, hey, we can make things easier for agents who are now in a non-face-to-face environment. How do we do that so that the consumer can say yes faster once they've agreed, and we complete the process? And I think you guys were one of the ones to do that. Now, is this available on both your final expense, on all your products, or is it limited?
No, great question. So on our final expense product, our Eagle Premier, it has a texting feature. Right now on all of our term products, it's the same idea, but it comes via email. So in other words, the client would get an email with a 6-digit code, and then they would give you the code back. Well, we're targeting end of second quarter, beginning of third quarter, to have it all available on the texting feature on our term products as well. But again, the same idea, where it's just a different vehicle. One of them is a text feature, one of them's an email, but you still get the 6-digit code you put in the system as a signature.
Cool. Let's talk about your suite of products for the traditional younger family, a mortgage protection client, somebody who's just recently originated a mortgage or refinanced their home, or they're looking for general life insurance. Let's talk about your suite of products that kind of lines up with that market demographic, and why do you think they're well positioned for this space?
No, yeah. So we have several different products that are available that seem to fit. And the reason and I'll cover a couple of them here for a moment, but the reason we have different products is we know that not every client is a one need client. The reality is each client you meet with may have a different set of needs or a different start of their life or different part of their life that they're in. So a couple, just to kind of put a umbrella around them, is we have what we call our cashback option products. Sometimes you may have heard it referred to as return of premium. It means the same thing. But what makes our cashback option products different is we have all the term periods available. So we have 15, 20, 25, and 30 years. Because again, not every client just has a 30-year mortgage. Some clients have 25, 20, and so on. It has living benefits included. So you're looking at critical, chronic, and terminal illness. There are 1 or 2 state variations, and I'll give you a website at the end that has all the good information on all that. But the reason that our cashback option products work is we have 2 different cashback option products. We have CBO 100 and CBO 50. Again, 100 means 100% of the money is going back to the client at the end of the term period if they don't use the product. 50 obviously means 50%. But the reason that resonates with clients is when you sit down with a client and you're talking with them and you explain that, hey, I can cover your mortgage up to $450,000 with an instant decision that's going to have all the term periods you need, so you can select right one, up to $450,000 with an instant decision.
Up to $450 with an instant decision.
Yes,
same day.
Absolutely, right there on the spot.
On the spot. When you say on the spot, is that like within the hour? What is it?
It means immediately. So as soon as you hit that final button, it's going to tell you yes or no.
As soon as you hit the button, so there's no waiting.
Correct. It's going to tell you yes or no.
Up to 450.
Up to 450. So it starts at 25,000, goes to 450. So it covers really the whole gamut, right? So you're going to have some clients that are around the $100,000 range. You're going to have some, depending on what coast you live on, you may be closer to the 400 range for a home. But You're going to get that instant decision. And just imagine the fact that when the client doesn't use the policy, they get all the money back they paid in on the base policy. So it's a win-win for the client. Roger, you can probably appreciate this. 5, 6, 7, 8 years ago, simplified term, the main focus was just a death benefit, was how much is it going to leave. Now the reality is that pendulum swung for living benefits, and it's what's in it for me, why I'm paying for this policy. So living benefits are certainly a big piece of that with the critical, chronic, and terminal. But another, you can think about it as a living benefit of it, is you get your money back at the end if you don't use it. So it's a pretty powerful product. Again, we have 2 of them, just depending on what fits the client's needs the best.
Now, you said something, and we're moving quickly here, and we get a lot of new listeners. Sometimes people are listening to our podcast that are not agents yet. They're in pre-licensing. So they haven't even, they're still getting acclimated to, what is cash value accumulation. They're still trying to figure that out. And you said critical, chronic, and terminal illness is living benefits. What does living benefits mean to Americo by definition, and how can that help the client? What's the benefit for the client? Because for new agents, they need to know that. What does it mean to Americo? Because for different companies, I think it means something slightly different. What does it mean to you guys, and how does it benefit the client, and why is it valuable?
Oh, great question. So what it means to Americo is when you think about critical, chronic, and terminal illness, depending on the category you're looking at, you're maybe thinking of a heart attack or a stroke or different things like that are certainly life-altering. Cancer falls into that category as well. Life-altering things that maybe in the past, if you didn't have living benefits, you would just keep the policy in force. And now these are benefits that can pay out early and pay out some of the policy proceeds early to the client. When we talk about how it's all processed as far as the determination on the amount and things like that, you mentioned there's several different companies that do it different ways. What we look at a very high level is we look at it, what the event that happened, how does that change the life expectancy? So in other words, if God forbid, if a client had a stroke and they have less than 6 months left to live, it's going to be a very substantial payout. If they come down with something, let's say, some small form of skin cancer and they have it removed over their lunch break and back to work, and it didn't change any of their life expectancy, that may not be as significant as, again, the stroke that, have 6 months left to live. So our claims team handles a lot of that stuff as far as the walking through the process. But what we do for the consumer is we walk you through that process step by step, the paperwork, and here's how the process works. And we work with the consumer and their doctors. But again, the reason it's so important is that it's just another feature that, by the way, is not an upsell. Those riders are built into the policy. So it's not something where you start with a base policy and then you add X amount of dollars a month for each one of these riders. It's all built into the policy itself.
Okay, cool. Well, I'm going to play devil's advocate now with you. Are you ready?
I'm ready.
This is like the 5-minute drill down on what agents are really thinking and the questions that we need to ask so that you guys can have an opportunity to answer that. Some people would say, I don't want to write Americo. They're too expensive. I hear they're one of the higher priced products out there. My clients, I'm trying to find the lowest priced product because that's where I'm providing the most value for my clients. And this gets spoken, and then people think it to be true. How does Americo respond to that you're one of the more expensive products in the market? Is that across the board? Is that a bad label? Is it all BS? Is it true? There you go. You get to address.
That's a great question. So it's probably all of the above. So I think there's depending on, if you look at the issue ages of policies, there are times we're going to be a little bit more than others. There's also times when you think about like our cashback option I described that we may be actually cheaper than some of our competitors. The reality with it is that when you look at it, and this is just my opinion, but if you're just looking at price and not value overall, I think you're missing a big part of the sale, because the reality is if you go in and you're talking with the consumer and you're focused primarily on price, and you have that in the consumer's head that it has to be price, I think a lot of times you lose the overall value. And so when you think about, for our Eagle product, different features it has in place, for our term products, the different features it has in place, And the other reality is that, again, what goes a long ways for what we have found, and this is just feedback we've gotten from all of our distribution partners, is they love the fact that with our e-application, we're going to tell you yes or no faster than anybody else. And the reality is at some point your time becomes money as well. So if you're waiting on pending policies for 5 days, 7 days, 10 days, 12 days to get an answer, in those 10 or 12 days, you know what's happening? The consumer's calling you back and saying, hey, by the way, have you heard an answer? What's going on with this? Why is this taking so long? So when you look at the overall value of the products itself, plus the value of the process of giving you a decision quickly, what we found is that that seems to win more times than not. But to answer your question, is there times that we're a little more expensive than others? Absolutely. We've never shied away from that. But I think there is some narrative out there that's probably inaccurate as far as, we see some of the crazy stuff posted out there that's not true. But, we try to stay singularly focused on what value we're providing. So
do you guys consider yourself like the Ferrari of insurance? You get what you pay for? Is that who Americo is?
We could run with that one. I like that. That's that's a good one for sure.
Do they give Ferraris? Do you guys get to drive Ferraris? If we can make that work, like if we can make that stick, do you think they'll give you guys Ferraris to drive?
I think this is the first step in upgrading a Honda to a Ferrari. So we're moving in the right direction. So
there you go.
Let's see if we can keep that moving.
So one of the things I think that people get hung up on sometimes is that they don't realize that your product has accidental death benefit built in. It's automatically included, right?
Correct.
In the Eagle Premier product. Is it included in your term products as well?
Great question. So we have a term product called our Term 125. So that's going to be our basic term policy, and by basic meaning not any cashback option to it, but it has a 25% accidental built in. So if our cashback option is our number one selling product, Term 125 would be our second best selling, which again is going to be just a simplified term product with living benefits, and it has a 25% accidental. So a lot of agents are loving that product because they, if you write a $200,000 policy, you have a $50,000 accidental already built in. And the key to the build-ins, to your point, is that the less you have to add on as you go along, and the better you can just talk about a price point at the front and then talk about all the benefits that are in that price point. We found that works a lot better than trying to add on, hey, Roger, we started at $50, and by the time we're done, we're at 68, and you're like, what happened to the $50 one? We would rather have it all be there and say, here's the price, but then here's all the benefits of it.
Yeah. You and I had a conversation a little while ago at an event, and we were talking about the quit smoking advantage.
Yes.
That you have. And I know you're coming up on the anniversary of that since you've launched it. How long is that kind of that niche marketing piece been in play with the Eagle Premier?
It's a great question. So I'm trying to think if it was, forgive me for being imprecise, I can't remember if it was June or July of 2018. So we're a little past the 3-year mark now. So right in that 3-year and several month range. So we're starting to see policies coming out of that 3-year window.
And the quit smoking product, I know you mentioned on the front end of the show when we first started, but you had said that they get non-tobacco rates, even though they're a tobacco user, for 3 years, and they have 2 years to actually quit, and they have to be tobacco free for 1 year. Is that correct? And if they are, they can actually maintain the non-tobacco rates for the duration of the policy. Is that how the program is designed?
You bet. So that's a great explanation you just gave. So a client signs up, they get non-smoker rates. So they have a 3-year window to quit for 1 year. We have some clients that have quit 6 months before the policy even became enforced. So they just, as soon as that gets enforced, if they continue to quit 1 year after the policy is written, they can contact us, test out of it, and they're off and running. But we give them a 3-year window because we know sometimes in the senior space, people didn't start smoking at 62. So we give them a little longer of a leeway, but so they have a 3-year window to quit for 1 year.
And there are options at the end of 3 years if they don't quit. So here's where some agents will push back and they'll go, yeah, but that rate's going to go through the roof when they get to year 3 and they don't quit. They never intended to quit. Let's talk about that because there's pushback in the market on that for that reason. But after having that conversation with you, I never actually processed it the way you presented it to me when we were standing around. And it actually inspired this interview today, because I thought that needed to get out there. That one tidbit of information is putting this story now in front of 25 to 30,000 listeners this month, Andrew. Come on now, let's nail this, okay?
So there's two things, like the myth, or two things we can overcome. Number one, to answer your question, the default in the system is to keep the premiums the same, but the face amount would adjust down. And the option two is to keep the face amount the same, but the premiums adjust up. So one thing on each one of those that I think is important. The second one we just talked about, which is the face amount remains the same, but the premiums would go up. Those premiums are based on their issue age, not their current age. So you write a 65-year-old, and let's say 3 years goes by, 3 policy years. So let's say they're 69 at that point, and let's say they said, I tried, I just couldn't quite quit smoking. All right, well, your premiums are going to go up, but they're based on age 65. So if they were to go look for a product somewhere else and they're still a smoker, now they're starting contestability period over again, and they're basing smoker rates with another company on age 69, not age 65. So that's the second piece. The first one that we found was that, again, the default in the system is to keep the premiums the same, but the face amount to go down some. So what you and I were talking about at a meeting not too long ago, that we've heard a lot of agents that are using this product. This is how they position this is, and I'll just use round numbers here, but let's say that a client is usually $75 a month for a smoker. And let's say Americo giving them non-smoker rates is $50 a month. So, and let's say that still buys $10,000 in coverage. So for carrier ABC, it's 75, for Americo, it's 50, and you still get 10,000. What a lot of agents are doing is saying, you know what, every other agent that doesn't represent Americo would be charging the client $75. So why don't we write an Americo,
near 75 or near 75?
Absolutely.
Yeah.
So why don't we write an Americo policy close to that $75 amount? Because the reason being is now that $10,000, again, I'm making up these numbers, but that $10,000 may have gone to 13 or 14 or 15,000. So now they're getting more coverage for the same value that they would have been paying $75 for 10,000. And then if they couldn't quite quit or tried to quit and it just didn't work, then the good news is that adjusts down. It's adjusting down closer to where they wanted to start to begin with. So again, that's not,
it didn't work. I like how you said if it didn't work. I mean, that's their choice. You're nicer there than I was, right? It's there. If it didn't quite work, you mean they didn't quite quit smoking?
Yeah, they didn't. They tried. But wasn't quite able to kick the habit. So there's several options available out there. Again, one of the things that we found was that if you can offer smokers non-smoker rates, on average, if you asked a room of 100 agents, they would probably tell you the difference in premiums somewhere 30-40% different in premiums. Yeah. So if you can save that over 3 years, you're saving close to $1,000 for the consumer. So it's a great opportunity for the agent and the consumer, or it's consumer to save money, the agent to close a sale, and it still gives them 3 years in order to quit for that 1 year window.
So it's a winner.
I think so. I mean, we wouldn't do it if it wasn't. So
it's a winner. They get lower smoking rates, and at the end, they're actually, if they convert to the tobacco rate because they didn't quit, because it didn't quite work, they get the age as if they were 3 years younger at that rate, because that's when they put the policy in force.
You bet.
Okay.
You bet.
So a lot of people miss that. And so
I would agree with you.
I think there was a good point there. All right. So here's the last segment. Why should every agent listening have Americo in their bag? This is your moment. You better get this right.
I like it.
They're all canceling their Americo contract.
I think, and I'm obviously a little biased about this, but I think the reason being is because we're the easiest company to do business with. Because when you can sit down and get an instant decision on a policy, and what we didn't talk about in the e-application itself is there's a box that's checked that when the policy is instantly approved, within 10 minutes, the client gets a copy of the email, or gets an email, which is a copy of the application. So it's not only instant decision, it's instant issue. So again, imagine sitting with the client, whether you're face-to-face or whether you're remote, and being able to get an instant decision. And whether it's yes, within 10 minutes, the client has what they purchased in their inbox. It's really hard to say, you know what, I'm not interested in that. I would rather wait 5 days to have a policy issued. And then when you look at the overall policy, the products themselves and all the features to it. And ultimately, the last thing I'll close with here is Americo's one of the largest privately owned insurance companies. And so we do our best to treat every agent and every client like family, because again, being family owned, that's what we've been asked to do. So we hope we win on service as well. We're constantly tweaking things. As a matter of fact, a lot of the stuff we went over today, the texting feature, the quit smoking advantage, the living benefits, that all came from feedback from our distribution. We're not a company that sits in a boardroom and says, we're going to try to figure out all this stuff. We're a company that cheats and says, hey, Roger, what's working for you and your agents? What are you hearing in the field? What can we do differently? And that doesn't mean we can implement everything, but what it means is we're going to listen to the feedback of our agents and of the field and say, how do we get better every single day? And that's really our focus. But it's been a blast hanging out with you on this. This is a lot of fun.
Well, I just, the way I like to wrap up these calls and these sessions with people like you and guests that we have on that are speaking is we want to leave our listeners with a big value point. And if I'm dealing with Americo, I've got policies issued, commissions are due. I mean, we talked about in that meeting that you and I spoke about where we were talking about Eagle Premier and the quit smoking advantage and things like that. I had talked about a three-pronged stool, and I said, really, in any of our carrier relationships that we have on the agency side of our business, where we have agents that are working with us from around the country, I always say that any type of carrier relationship has to be like a three-legged stool. Number one, it has to be good for the carrier, right? It can't be the lowest priced product out there all the time, because you're not going to get it approved with very many people. It can't be the one that gets guaranteed all the time, because if you've got anything wrong with your pricing, that guaranteed issue company comes and then they go because they can't sustain. So it has to be good for the company, which means it has to be profitable, right? We are in business, for goodness sake, America, right? We are in business and we are in a capitalist environment. We are here to make money. Insurance companies, like banks, want to make money from doing business with people that they serve. They just give guarantees to policyholders, that a bank doesn't give to hold on and invest your money. They give guarantees up front. I think they're a better institution than banks in most cases. So it has to be good for the carrier. Number two, it has to be good for the client. It has to be good for the client. What I mean by that is that the client has to be able to understand the process and easily go through some simple process to get qualified, approved, and get a policy issued. We don't want to make them run through a gauntlet that's super complicated or time-consuming because it is 10% lower in price. Because that, in turn, blows out some of those people. We said sometimes we wear them out at the end when we're trying to get things done and we can't get it over the line because it's kind of cumbersome. It's not clean and efficient. So it has to be good for the client, has to protect them, and it has to be there for them when their family needs it most. And then lastly, it has to be good for the agent. It has to be good for the agent. So if you've got a great product for a carrier, great price for a client, but it's cumbersome for the agent and the agent can't get paid on it and it's awkward, or they keep having additional amendments, or there's a high percentage, 20, 30, 40% that get declined because of things that pop up. Like these things, while you may believe that the lowest price is best for the client, the lowest price is not best for you, because with that lowest price goes these other variables and factors that impacts your ability to be able to go out and help another family. And so it has to be good for the carrier, it has to be good for the client, it has to be good for the agent. That means fast pay. What does fast pay mean? And we'll finish on this. What does fast pay mean to Americo? And what priority do you guys have on that in getting your agents paid? And I think you guys even offer an extra little bonus that other companies aren't doing, and maybe we can close off with that. Fast pay and bonuses.
Absolutely. It's always good to close with how do you make money?
Right.
So for us, from a commission standpoint, is when we draft the policy, we're gonna release the commission. So you talked about earlier about if a lot of the policies that a lot of our distribution partners write, actually will draft that same day. So if you write a policy on a Monday and you set it up to draft Monday, that means that the commissions are going to be released. And that means you're going to get paid very, very quickly. So we're a company that, again, if we're going to give you, we can't say on the one hand, let's give you a fast process and then delay the commissions on the back end. So
what does very, very quickly mean? That wasn't very specific.
It means if the commissions are released, let's say on a Monday night, then you're going to see it on your commission statement Tuesday morning. And that means we've released the money from our account. So it could be, we've heard anything as quickly as it's in your bank account the next day to 2 or 3 days later. Some of it depends on the banking institution you use, but just know if you see it on your commission statement the next morning, or if you get an email from Americo, a lot of people get emails from us. They say they love these 5 a.m. emails that say, hey, by the way, you have 2 deposits, 3 deposits, 4 deposits. When you get that, you know the money has been released from us, and you know that you can be checking your bank account to get the money. The last piece is the close on is our bonus. To my knowledge, we're one of the only companies out there that's really doing this. Is we offer what we call our You First bonus. So what that is, it's an 8% bonus based on your business. So the easy math on this is it starts, this current bonus period was December 1 through May 31st. If an agent writes 45,000 in paid production in that time frame or more, with at least with the good placement persistency, what that does is that allows them to get an 8% bonus on their money or on their business. To your point about or more, 45,000 gets you in the game. And then after that, the sky's the limit. So what agents are loving about this bonus is that the only person you're competing against is yourself. So you don't have to be in the top 100 or top 70 or 90 or whatever it is. All you have to do is compete against yourself. So no matter
top 10.
A top 10 would be another example. But one of the things that's really cool about this is, I mean, we were paying out bonus checks upwards of $40,000 in a 6-month period of time just to say thank you. So again,
$40,000 bonus checks for a 6-month window.
Mm-hmm. Yeah, absolutely.
That's a bonus on top of the commission.
On top of everything else. It's our way of saying thanks. Here's the reason we do it every 6 months is if you have builders listening to this and you say, you know what, I'm building a team, you're constantly recruiting. And so we do this every 6 months because we don't want a scenario where you bring on an agent, let's say in September, and they're competing against somebody who started in January for the same incentive. We want to be able to say every 6 months you have a clean slate to start to get that incentive. So again, it's our way of saying thanks. We love it. To put it in perspective, I think we paid out over 300 bonus checks this last bonus time. So the question always becomes, is it obtainable? Absolutely. Because if you do 45,000, you divide it by 26 weeks, you're talking about $2,000 in APV per week. So about 2 policies a week. Most agents that are full-time are writing more than 2 policies a week. So it's certainly obtainable. It doesn't mean it's easy, but it's certainly obtainable.
Beautiful, man. Beautiful. Well, I loved how we finished there. Thank you, Andrew, man, for being on. I appreciate your honesty. Appreciate you being upfront. Appreciate you handling some of those tough questions. Absolutely. And if people want to get a hold of Americo, Google Americo. That would be a good place to start. Or you can reach out to Life Insurance Academy and we can get you connected to the right people to get you set up. A lot of the market that we serve here on the Life Insurance Academy is that simplified issue space, mortgage protection, final expense, helping people get approved quickly, efficiently, and helping agents get paid fast. And Americo is one of the leading companies, as I said, who's been doing cool things in the space now for some time. It's one of the leading companies, one of the fastest growing companies, I think, in the industry as far as a revenue standpoint and market share. And so it would have been remiss of us not to have featured them as one of the leading companies in this space. So thank you, Andrew, for being with us today. We really appreciate it.
Thank you so much for your time. I really appreciate it as well. It's been a lot of fun.
Fantastic. And thank you guys for watching another episode of the Life Insurance Academy. Please check us out on all the socials. And if you're watching us on YouTube, remember to like, subscribe, and turn on those notifications so you can be notified when we release more content just like this. We'll see you on the next episode.